Hi everyone, it's James here. Welcome to this video on Thursday. I was going to do a live stream, but my internet's still a bit dodgy. I didn't want to risk it, so I'm going to do it by recording instead. Let's have a look at this master page, and I've got Bitcoin and the stock indices, gold and silver, dollar, and the energies here. I think today could be a bit of a pullback day. All of these indices and commodities are a bit overstretched, and I think there's still, too much uncertainty going into the last part of this week for us to get too gung-ho. And of course, Bitcoin and the stock indices have reached pretty important levels. Just scanning across this page, you can see Bitcoin quite firm, a good rally day yesterday, a new high, and it didn't drop down much after tagging the top of this flag, which we'll have a look at more closely just now. Now, turning to stocks, NASDAQ is at its top 200 period Bollinger Band. We'll look at the charts more closely in a minute, but a bit of a warning sign. 15 days up, it's probably due a sharp correction. Same as the S&P, looks like it's flagging in a bull flag, and we haven't reached the 200 period Bollinger Band. We're now short on gold and silver. These are rolling down. We'll have a look at the charts as well. Silver we've just resold. After getting stopped out on the shorts yesterday, I've resold again. The dollar is hovering around in the moving average cluster. In other words, it's at average price and still stuck there, and it may faff around and might have to go a little higher. And then in oil, we added more shorts yesterday on that spike up, as I said I would. If you look at yesterday's video, you'll see that. And then natural gas, I'm still long. We have a couple of inverse hammer candles here above the 20 period simple moving average on the day chart. So, perhaps we can bounce out of here. Let's look more closely. I'm going to spend a few seconds on each chart. Here's the NASDAQ reaching up to that top 200 period, and I think we could come back down to 25,900. or the top of the green block at about 26,200-ish. Ideally, we'll get just below 26,000 to 25,800 where we can rebuy. S&P is similar, also at very stretched levels, and don't think for a moment that these can't keep going up. Look at what happened last time when we had the swag breadth thrust. The moment we moved up, we consolidated a little bit like we're doing now, held support, and then continued to move higher. The NASDAQ was similar on that last breadth thrust as well, and you can see we didn't even actually consolidate or retrace much and just kept on going. And it took for us to get to the middle of the year before we even had a little bit of a pullback, and then we continued on higher. So these could keep on moving up. I'm short on the NASDAQ now, 50% hedged, and fully short on the S&P for now. I've still got longs on all of the names on this page. Going across to Bitcoin, I said we'd re-look at this. This is the CME futures chart, and you can see what a precarious level we're at. If we can't bust up here now, and I suppose we might have to retrace to the red line at about 76,200 or 300. I'm not sure if we'll be able to get up through the CME gap and up to the top of the empty zone today, maybe tomorrow. Like I said, tomorrow might be to the moon Friday. But if we are going to pull back, allow for a pullback to the red line and the trend line that we broke through. And if we did complete the pullback and it's not a bear flag and we bounce out of there, that'll be a fantastic trade. Probably up to the top of the empty zone, about 85,000. Allow for a bit of a pullback from there, and then up we go. Something like that, and that's the bullish scenario. But the bearish scenario is equally valid. And as I pointed out in the last video, the bear flag scenario, if we fail here and we move down and break through the bottom of the flag, we'll move down to 48,000. That's the length of the flagpole moving into the flag. So a pretty precarious situation for Bitcoin right now, and we're 50% hedged. I've also got some longs on XRP, Solana, and Ethereum. On metals, as I said, I'm short on gold and silver, but still long on copper. Copper's moving down in sympathy with gold and silver, but I'm going to keep that position on. Let's see if we can hold this level, but do allow for a bit of a pullback on copper down to about $5.80 or 90 before a bounce. Of course, if gold and silver move down further than the projections that I've got over here, then copper could correct a little bit deeper too. And then natural gas and WTI oil. Let's start with oil. As I said, we sold again yesterday at the top there. And I posted this in yesterday's video and twice on X yesterday. So, the chance was there. Target is $68, but it might take some time, and I'm allowing for several weeks or even months for us to get down there. In the meantime, we'll continue to sell rallies and potentially take profit on dips. And then on natural gas, I'm still long. We've got these two inverse hammer candles here, just above the 20 period moving average on the 4-hour chart. And we are moving higher. We didn't get that dip deeper. We may still have to do that. I hope not. And if we can hold here, the next target should be $3. And above $3, $3.75 and then $4.25. It might take some time. Let's have a look at the day chart. On the day chart, you can see we've broken nicely out of the falling wedge, but we're stuck under the 20 period moving average. There's the 50 and there's the first target, the underside of that channel line. Let's see how we go today. I'm hoping that the storage report will give us a little bit more impetus to the upside, and I hope it happens today. Contracts roll over today for me, so I'm going to be rolling into the new contract, and I'm slightly shy of the new contract price at 288. It's currently 288. That's the June contract, and we're currently trading at 270. So I'm 18 cents shy, and I'm hoping that we can get up there a little bit later on today. Otherwise, I'll have to take this contract off for a small loss and then get straight into the next contract on a pullback. It's much easier trading this on the continuous if you don't like trading futures. And you can see if you're trading on the continuous price, which I do occasionally myself over at Pepperstone, you can just hold this trade. It's looking pretty good. We've also got those inverse hammer candles here on the 4-hour chart. And on the day chart here on the Pepperstone continuous, you can see we've ground to a dead halt. Not a bad sign really. We've run out of downwards momentum completely, but so it might be if we look at this on a week chart, be something like a full stop candle. Yeah, you can see last week was a full stop doji candle, and this week is another one so far. This is on the continuous price. If we look at the same thing on the futures price, looks a little different. We've got to zoom right in here. This is the futures price at the Henry Hub, and there you can see 2 doji weeks with very, very skinny bodies and tiny little wicks. So the 4-hour chart going back here shows that we might be able to bounce out of here with these inverse hammer candles and so on. So that looks quite good. And then also on this page, I'm still long on uranium. It dipped down a bit yesterday, but really picked up pace, and we've made a new high in uranium. And this is looking excellent. We've got some positions from 46 and we've got some from 50. We're currently trading at 57. So that's going quite well. Hold thumbs. And then lithium, also another trade that we've got on, some good entries over here. We did get long very, very low down on lithium. We took profit along the way and we rebought into this dip. If we look at the weekly charts on lithium and uranium, you can see there's a long way for lithium to go still, probably going to a new high. And the weekly chart on uranium shows that we could go a lot higher than we're currently trading. And really, we've only just started. Once we get back to $135 on uranium, I think that might also just be the start of a much larger, stronger, higher move. It's a slow-moving instrument, so don't get too gung-ho, and there are plenty of opportunities for pullbacks and retracements to get long on, so don't buy the tops. So that's it, folks, and I think that's everything. Just going back to the master page, Bitcoin holding strong, NASDAQ all, starting to look like they might dip down today. Gold and silver moving down quite nicely. We're short on both of those. WTI oil I'm short on. Natural gas long. This is the only one that I think might be a little bit of a problem, but so far, it's looking okay on the 4-hour chart. Folks, I hope you enjoyed the video. Have a great trading day, and I'll see you in the next one. And if you did enjoy the content, I'd really appreciate your subscription to this channel. It doesn't cost you anything. I know it's another content channel that you have to subscribe to, which can be annoying, but it will really help us. And if you enjoy the content, it will help us to improve and grow. So click the subscribe button, and while you're there, click the notification bell so that you don't miss the next video. See you soon.
Click, crypto in a quick swap, pips on the pair when the Forex tick pop, gold in a zone, see a glint at the top, crude on a move, that momentum don't stop. We trade at ArcisFX, turn that grind into progress. From the bell to the reset, we don't guess, we finesse. We trade at ArcisFX, NATGAS jump, we up next. Every tick, every index, turn that risk to a flex. Plan on the pad, I don't trace, I prepare. Levels all lined, I'm aligned, I'm aware. Stops locked tight, I'm protecting the share.